Hello and welcome back everyone for another week of crypto news here at Mainstream Cryptos. It's your girl Abby and today we'll be exploring once again the top 15 most important things you need to know about what's been happening in the crypto world. If you're new to the channel, welcome, and if you're old to the channel, welcome too. The only difference between those who are new and old to the channel is that if you're new and you haven't yet subscribed, I'm happy and I'm going to ask you to subscribe. If you're old to the channel and you still haven't subscribed, I'm just disappointed. With that being said, let's dive into the news for this week. We have some pretty exciting stuff on the table. Number 1. 70.8 million XRP has been found in the wallets of these investors. According to Whale Stats, there are more than 70.8 million XRP in the accounts of BNB, the blockchain Binance, and other assets on the network of the same name. Given the current token price of $0.38 per XRP, that volume can be estimated at 27.34 million. XRP currently accounts for 2.41% of the combined portfolio of the top 100 investors in this category. It does not seem like the whale's accumulation of such a large volume in XRP is due to expectations of quick profits, given that the token has only grown by 20% since the start of the year. Yes, after more than a year of a bear market, such numbers seem quite pleasing, but compared to Bitcoin's price action over the same period, it seems small. In this way, one might think that XRP buying by whales is of a longer-term nature. It can be assumed that the big money sights are set on the possible resolution of litigation between Ripple and the SEC during the first half of 2023. The crypto company itself expressed the hope of ending its 3-year-long legal battle in the next 6 months in its latest quarterly report. Number 2. What has PayPal been up to recently? PayPal keeps holding Bitcoin and Ethereum worth hundreds of millions of dollars. Global payments company PayPal, which embraced crypto 2 years ago, allowing its clients first to buy and store and then to move crypto to third-party wallets, keeps working with cryptocurrencies, holding more than $500 million worth of US dollars in crypto. According to Form 10-K submitted to the US Securities and Exchange Commission by PayPal, as of the 31st December, the company holds a cumulative $604 million worth of 4 main digital currencies, Bitcoin, Ethereum, Litecoin, and Bitcoin Cash in its clients' wallets. There you have it, people. Support PayPal because PayPal supports you by supporting crypto. And on to our third piece of news for this week. As always, in order to gain a balanced viewpoint, we're going to take a look at what the crypto critics say. Jim Cramer said he has been waiting for the big sweep in crypto, and here's what he meant. Popular media personality, investor, and host of CNBC's Mad Money, Jim Cramer, whom most of you will know, said in a tweet today that he has been awaiting the big sweep in the crypto ecosystem. For the past 24 hours, the industry has been riled. This was on Friday, for your information. The industry has been riled by the enforcement action brought on by the United States Securities and Exchange Commission, the SEC, over the Kraken exchange for its staking product. The SEC, catch this, fined the trading platform $30 million and reached an agreement that would see the exchange halt the offering of the product it launched back in 2019 to US customers. Taking to Twitter, Jim Cramer sounded somewhat elated about the enforcement action. No surprise there. Commenting on a tweet from acclaimed legal practitioner and professor John Reed Stark, who noted the action dubbed a crypto enforcement sweep is still ongoing, Cramer posed a question about how big the sweep is. And there you can see his tweet. How big is this? I have been waiting for the big sweep. Since the enforcement action was published by the SEC, several leaders in the digital currency ecosystem have stood up against the regulator for unfair practices. Despite the majority, the SEC may see a supporter in Jim Cramer and a host of others who believe staking models on some protocols conform with the provisions of the Howey test for determining whether assets are securities or not. Number 4. And now to give a bit of background to the previous news item, let's take a look at what the SEC has actually been doing. $70 billion is gone from the crypto markets as the SEC cracks down on the centralized exchanges. Bitcoin slumped by over $1,000 in the past 24 hours to a 3-week low below $22,000 as the SEC officially went after crypto staking. Most altcoins are bleeding out just as badly, and many are dumping by over 5% in a day. Bitcoin has dumped below $22,000. Bitcoin was not only unable to sustain above $24,000, but dropped back down to $23,000 just days later. Bitcoin remained stuck in a familiar range close to $23,000. This is when the landscape changed as the rumors of the SEC cracking down on crypto staking actually materialized, and the regulator went after Kraken. Shed a tear, everyone. Shed a tear. On to number 5. Coinbase. The Coinbase CEO is unsurprisingly concerned about the SEC ambitions to crack down on crypto staking. On the 9th of Feb, Brian Armstrong cautioned that they were hearing rumors that the SEC would like to get rid of crypto staking in the US for retail customers. He said he hopes this is not the case, as, I quote, "I believe it would be a terrible path for the US if that was allowed to happen." Armstrong highlighted some of the benefits of staking, adding that it brings many positive improvements to the industry. These include scalability, increased security, reduced carbon footprints, and enabling users to participate in running a crypto network. And there you can see the tweet. The SEC has other ideas, however, and wants to treat proof-of-stake tokens the same as it does stocks, as securities. The Coinbase boss warned that the US should be a place where new technologies and innovation are encouraged, and not stifled by lack of clear rules. When it comes to financial services and Web3, it's a matter of national security that these capabilities be built out in the US. Is he overstating? Is he understating? What is your opinion on that? Is it a matter of national security that these capabilities be built out in the US? Why don't you pop your opinion in the comments? We'd love to hear what you're thinking. Moving on to number 6. The Ripple CEO weighs in on global crypto adoption after the SEC clamped down. Brad Garlinghouse, the CEO of the blockchain payment company that fights the US SEC in court all over the status of XRP, believes there's a lot of positive news in terms of crypto adoption worldwide. Being the world's largest economy, the actions undertaken by the US, its government, and the local regulatory bodies tend to cause significant damage to the cryptocurrency industry. After speculations that the SEC could go after crypto staking, the watchdog followed through and halted Kraken's services. Garlinghouse believes people should look at other jurisdictions, however, which are significantly more friendly towards the industry. Among those is Dubai, which has introduced several rulebooks allowing crypto companies to set up offices while being regulated by the local watchdog. The Australian government is also reportedly looking to update its existing regulatory frameworks to include licensing and custody of crypto assets. Garlinghouse's other examples included the recent guidelines from the South Korean Financial Services Commission, the UK HMT's new consultation on the government's intent to establish a proportionate, clear framework, and Brazil's new legislative rulebook. Ripple's CEO, though, didn't miss out on the opportunity to blast the US for its controversial approach. You can see that he says the regulators and what they are doing elsewhere is what the US is desperately missing. Number 7. Moving away from the SEC, you can all put away your handkerchiefs. Let's take a look at what has happened in Lebanon. Lebanon devalues its currency by 90%, and Snowden believes that Bitcoin could fix this. Lebanon is adopting a new official exchange rate, devaluing its local currency by nearly 90%. Phew. The new rate is set at 15,000 Lebanese pounds against the US dollar, according to a January 31st report, which cited a statement from the country's central bank governor, Riyad Salameh. This marks a significant shift from the old rate of 1,507 Lebanese pounds per dollar. The official Lebanese currency has been pegged to the dollar at that rate since 1997. Salameh stated that commercial banks in Lebanon will see the part of their equity that is in pound decrease once the new official exchange rate is implemented. He added that to cease the impact of the new development, the banks would be given 5 years to reconstitute the losses due to the devaluation. While the International Monetary Fund has offered a bailout by forcing the Western Asian country into devaluing its official currency to solve its liquidity crisis, Bitcoin could have offered a better solution by providing some protection for currency devaluation and liquidity. This is what the popular whistleblower and Bitcoin proponent, Edward Snowden, hinted at earlier. And there you can see his tweet. Bitcoin has a limited supply of only 21 million units, with more than 90% of its maximum supply already in circulation. Due to the limited supply, and here a bit of economics comes into play, Lebanese do not have to wake up to such news as their government devaluing their Bitcoin. Moreover, due to its decentralized nature, Bitcoin could bring foreign currency to the cash-strapped Lebanese scrambling for alternative banking solutions without going through a financial institution. That is it not the beauty of crypto? We're looking at number 8. Binance aims to improve proof of reserve system with zero-knowledge snarks. The company found several issues with employing only the Merkle tree system. Binance said earlier today that it had introduced zero-knowledge snarks to its proof of reserve system in an attempt to make it easier for users and other entities to verify its solvency. Additionally, the exchange has added 4 new crypto assets to its proof of reserve system. Zero-knowledge succinct non-interactive argument of knowledge, or ZK snarks, is a cryptographic tool allowing the entity that wants to prove the existence of its reserves to do so without actually disclosing what those reserves are. Binance added that it has made its proof of reserve system open source in an attempt to increase the transparency of its reserves. Number 9. Shiba Inu, Polkadot, and more have been added to Binance's proof of reserves verification system. The meme-inspired cryptocurrency Shiba Inu and the native token of the blockchain of blockchains, Polkadot, have been added, along with other tokens, to Binance's proof of reserves verification system. Both SHIB and DOT were added alongside Solana and Chiliz to Binance's system, bringing the total number of verifiable assets on the platform to 13. And I bet they're going to add another 1 or 2 or more soon, because they don't want to be stuck on an unlucky number, do they? News item number 10. Investors are interested in crypto despite the bear market. Michael Demissy, the head of digital assets at Wall Street powerhouse the Bank of New York Mellon, has disclosed that investors are still very interested in the digital asset space amid the bear market. According to a Reuters report, Demissy believes cryptocurrencies are here to stay, as investors have not lost interest in the nascent industry, despite the collapse of several firms and other unfavorable events that occurred last year. Subtitles, despite FTX. Demissy, he says digital assets are here to stay. The Bank of New York Mellon executive voiced his opinion during a crypto panel hosted at Afore Consulting's 7th annual FinTech and Regulation Conference. What we see is clients are absolutely interested in digital assets, broadly, Demissy said. Number 11. The bear market provides growth opportunities. The Deutsche Bank is to invest in 2 crypto companies. The Deutsche Bank AG's asset management arm, the DWS Group, is currently in talks with 2 German cryptocurrency firms over minority stake acquisitions. The investment is part of the DWS's efforts to revive growth and investor confidence, Bloomberg reported Wednesday, citing people familiar with the matter. As per the report, the DWS Group CEO, Stefan Hoops, plans to invest in Frankfurt-based crypto exchange traded products provider Deutsche Digital Assets and the Bankhaus Scheich-owned digital asset trading firm Tradias. Hoops is trying to mend DWS's reputation after being sued by a German consumer group for greenwashing misrepresentations. Number 12. And some more on Germany. The German DECA Bank partners with Metaco to launch tokenization platform. With the help of digital asset company Metaco, the 105-year-old German bank DECA Bank plans to introduce a tokenization platform built on the blockchain. Digital asset custody executive at DECA Bank, Andreas Sack, said the organization aims to deliver its blockchain platform in 2024. That's next year, if you didn't know, with the underlying infrastructure completed by 2023, which would be this year. Sack stated, The tokenization platform infrastructure will be ready in the foreseeable future, and that will launch the first minimum viable product in our crypto custody solution. Moreover, he also said that the tokenization platform's initial trial trades would probably happen this year. The upcoming Bank blockchain platform is built in tandem with Metaco Harmonize, a digital asset management system. On January the 31st, the bank publicized its intention to implement Metaco's Harmonize as the backbone of an institutional digital asset offering. 13. Switching from Germany to Japan, the Japanese tech firm Fujitsu announced Web3 acceleration platform. Fujitsu, a Japanese multinational technology firm, has announced the release of a new platform to aid Web3 developers globally. Moreover, Fujitsu's Web3 acceleration platform intends to supply a development environment, blockchain-based service APIs, high computing technologies, simulations, AI, combinatorial optimization, and more to startups, industry partners, and universities working on Web3 applications and services. In addition, the Fujitsu Acceleration Program for Containers as a Service, CAAS, will provide free access to chosen members in its worldwide partner program. Starting in March, program partners in Japan will have access to the platform. The business intends to roll it out internationally in the second half of this year. Moreover, Fujitsu aims to hold a worldwide planning and development competition to aid in the expansion of its new platform, with the goals of establishing DAO communities and developing original Web3 services. Well, Fujitsu has certainly set its sights high and looks to be achieving a lot this year. Moving on to number 14. Innovation in Asia. China launches a new research center focusing on blockchain tech. China has announced the launch of a new research center that will focus on blockchain technology, despite the country's rocky history with cryptocurrencies. The National Blockchain Technology Innovation Center in China has received approval from the Ministry of Science and Technology. According to South China Morning Post, the primary goals of the research center are on studying the technology for industrial applications and how it may be implemented in the national economy. The new facility will work in tandem with Chinese academic institutions, government labs, and private enterprises. Furthermore, the Microchip Research Institution, a Beijing-based R&D organization, and the Edge Computing Research Institute will oversee the center's operations. Not gonna lie, I do find this quite a surprise in light of the fact that Chinese government has cracked down hard on anything crypto related. It will be interesting to see where they take this new research. Are you on track? Number 15. Last but not least, Uniswap DAO votes in favor of BNB chain deployment. To implement the planned deployment of Uniswap v3 on the BNB chain, the Uniswap Decentralized Autonomous Organization, DAO, has just completed the final vote that will be employed. Almost two-thirds of DAO delegates approved the Friday move, as reported by the platform that collected the votes. A follow-up vote held between February the 2nd and 10th confirmed Layer 0 rival Wormhole as Uniswap's partner. Furthermore, voting in support of the proposal included delegates with substantial sway, such as the heads of Ethereum's core development team, Consensus, and Compound Finance's Robert Leshner. Andreessen Horowitz, a prominent venture capital company, used 15 million votes to defeat the measure at the time. Before April the 1st, when the business license expiration might allow imitation platforms to replicate Uniswap's v3 software and construct rivals, Uniswap is scrambling to deploy its new version, v3, platform onto the BNB chain. You got it, ladies and gentlemen. That's the good, the bad, and the in-between for the week. I hope you found it helpful. Just a very gentle and small reminder to like the video and subscribe if you would like more news of this sort. Here at Mainstream Cryptos, we really endeavor to make the weekly news update a perfect summary of what has been going on all around the world in terms of crypto, so that instead of spending hours browsing articles, receiving spam in your inbox, and wading through all the details of irrelevant information, you can just take 20 to 25 minutes out of your day once a week to tune into Mainstream Cryptos, where I will be sharing with you the 15 most significant updates. See you again next week. #StaySafu.